Olix Network 18, Mission Poshan, Bhavishya Roshan.
Well, let's get in some market opinion now. Earlier today, we spoke with Neelkanth Mishra, MD and India Equity Strategist at Credit Suisse. Let's hear out what he has to say on the economy as well as the markets.
The economic activity momentum may have peaked, maybe a couple of months back. There are headwinds appearing for economic growth. They have, right? So if interest rates have gone up, and not just bond yields, which of course finance a very large part of incremental lending, but that's where the large part of incremental lending is anchored to. We've also seen deposit rates start to go up. We've seen lending rates start to go up, and these are natural tighteners. We have seen a 3.6% correction, or rather cut to FY19 EPS after the results season, the March quarter results. The year-on-year growth now is 34% in FY19, which looks very high, but that's because there are a lot of one-offs in the FY18 base. But I still think that we will end up at 25-26%. So by and large, some cuts will continue, but hopefully not at the pace at which we saw them in the March quarter. The FY18 numbers are 6-7% lower than they should be. Then at a 25% growth that we now think FY19 will settle at, we're actually talking about a 17-18% growth, which is not that aggressive. Maybe we could be 2 or 3 percentage points more aggressive, but because of the low base of FY18, the headline for FY19 will look strong. The rupee has bounced back from what I would call very precarious levels, but we still think there is a lot of risk to the currency because the balance of payment situation remains in the negative. So if the rupee continues to stay weak, the earnings for, say, the IT names, the metal names, the petrochemical names, some of the pharma names, I think they naturally get upgraded.
Okay, that's the view from CS. Let's get to the market now. It's really building on gains, 140 points up on the mid-cap index. Nifty's holding on. So far, so good. If you pull up the intraday, the difference in today's action in the last couple of days is that till now the recovery is intact. Sellers haven't emerged, at least for the moment. So let's see what Ashwini as well as Sandeep make of this. Ashwini, thanks for joining in again. So how do you rate this right now? Is this a bounce that you would like to short, or is that a call better taken maybe after the policy?
See, this bounce is sustaining, A. B, the way financials are showing short covering, it appears that more or less, the market has decided, unless the sledgehammer is taken out with a 50 basis point hike, the rest of it is pretty much discounted. So my sense is that this policy will lead to a large short covering rally, particularly in the financials. And if that happens, obviously Nifty also goes up. So maybe we head towards the higher end of the range. And for that, basically 10,550, 10,750 holds on for the day. So the right way to play this is to get long on financials. And financials which have been beaten up black and blue because of this rate hike fear. So right now I want to get long on housing finance, because if financials recover, things like Indiabulls Housing and Canfin Home, etc., will have fairly strong upside. So that way Canfin Home is a buy with a stop of 352, target of 368. Indiabulls Housing is a buy with a stop of 1155, target of 1200. And TVS Motor is a buy with a stop of 565, target of 590. Let me point out that Indian central banks are known to do what is not expected. So keep that in mind. This is not US Fed, where everything is leaked out and priced in before the event.
All right, Ashwini, thanks so much for that. By the way, we have some news that's flashing for you on the screen. HCC, they won a contract in Bangladesh. It's a JV basically with the Max Group, if I saw that right, with the Max Group out there. In fact, the value as well should come up. Remember, it's seen a lot of selling pressure. Now from the lows, it's seen a bit of recovery. The Bangladesh contract is worth around 737 crores and their share will be around 295 crores. The bigger problem is you're winning contracts, that's good, but how do you fund this? What's your working capital requirement and from where really do you get that? For the time being, the street is celebrating that. The stock spikes up to the high point of the day. Sandeep, coming across to you. What's your strategy on the Nifty, and if you could help us out with your picks as well?
Afternoon, Nigel. I also see a bounce back and probably at least a 50 to 70 points in the Nifty, maybe 120, 150 points on the Bank Nifty from the current levels. I would go long in a Bajaj Finance, stop loss of 2120, target of 2205, and sell in a PD Light, stop loss of 1100, target of 1035.
Okay, fair enough. Ashwini, apart from financials, anything specific on a stock like Titan? Because Titan has been pretty much at the center of the bear attack when it comes to large caps. How would you read today's rebound on the stock?
Titan hasn't come off a whole lot, but it's a consumption type story, mild correction, and after that it is again showing upside. But what is interesting is in the mid caps, there are several stocks which got bashed up 50-60%, things like Avanti Feed or Thirumalai Chemical. Out there, I think maybe long-term bottoms are in the process of getting created. So I would get into both those stocks and start building portfolios wherever you have these quality stocks which are down 50-60%, because now from here maybe some of the stocks will drop out of the mid-cap correction and the correction will continue in the more poorer quality stocks. So that way, even if the mid-cap index has a pullback, these stocks are 40 to 50% below their 200-day moving average. Even a small bounce will be 500 points on these stocks.
Okay, all right. Thanks so much for that, Ashwini, as well as Sandeep for joining in and giving us all those trading strategies. But let's focus on the European markets. We're getting the initial rates that are coming in there. Remember, yesterday it was a bit of a mixed session. The FTSE was a relative underperformer. It ended with a cut of around 0.5%. You had banking stocks that were under some pressure yesterday. But today, some green just to kickstart trade. So 0.2% higher. That's pretty good news. We'll keep an eye on that front. At least we're seeing some support coming in from those European markets. So the global piece has been okay. The problem has been in India itself. We have crude, you have this ASM, you have auditors, all sorts of issues. But if the globe holds steady, then some of these issues will gradually get sorted out.
Yeah, and if the RBI doesn't throw a googly, as Ashwini is saying.
Ashwini said, expect anything.
So let's see, we'll have the answers in just some time from now. Quick break on that note. As we count down to the policy, we will tell you what the market is expecting from the governor in just about an hour and a half. The Reserve Bank will release its monetary policy today in just about 2 hours from now. Lata is here to take us through what the expectations are on the street. Lata, we've already seen this huge spike up in rates in the benchmark yield. So is the market building in the prospects of a rate hike?
There is a lot of confusion as to what to expect. Ritu did a poll of many market participants and only 10% said, yes, there will be a hike. The Citizens Monetary Policy Committee, which deliberated on CNBC TV18, 3:2 voted for a hike. So keep that on the table. There's a lot of confusion in the market. My point is that a rate hike generally is not bad news because it is coming out of growth. Capacities are getting filled up. In RBI's language, it is output gap is closing, which means there is no excess capacity. And therefore, producers will start hiking prices now. Aggregate demand is strong. And therefore, the price hike, therefore, the rate hike. That's good news. Again, so much is priced. In year to date, you've already seen yields rise by about 140 basis points, no matter which yield you take, CPs, CDs, bonds, treasuries, government securities. So therefore, it is in the price. Now, what will market watch for? The voting pattern, which is just running for you. If it is 4 votes for a hike and 2 for a pause, which is quite likely, then the vote goes, but it looks like there are still dovish elements. If it is even 5:1, maybe it will be taken. But if it is 5 votes for a hike and 1 for a 50 basis hike, then, you clearly know that there's something very, very something worrying the Reserve Bank. You'll, of course, have to watch for the monetary policy statement. If there is an indication that this is the start of a cycle, again, that'll be a little worrisome. Are they saying financial conditions are affecting growth already? That would be a matter of concern. So really, now it is not a hike that's going to spook the market. It is the talk and it is the nature of the voting that will impact the market. And most importantly, this is not the end of the game. The market will give its verdict only temporarily and wait for the minutes 20 days hence to find out exactly what the monetary policy is thinking. So the reaction will be, whatever it is, tentative. 20 days later, there's more to come.
Okay, thanks so much for that, Lata. Well, we spoke to a host of market experts on what their expectations are from the RBI monetary policy and the interest rates hikes that are expected later today. Let's listen in.
I think at some point in later this year, there is a hike coming because growth will be strong and the RBI's tolerance for inflation is pretty low.
Given some of the stresses that global currencies have seen, some of the weakness in the rupee and oil prices, my guess is the RBI is probably going to end up raising rates just to be safe and not just wait for the monsoon.
The rate hike next week is more or less factored in, or more than adequately factored in, if I may dare to add. The April Monetary Policy Committee minutes did indicate about a rate hike.
Well, let's get on with another CNBC TV18 exclusive. Earlier today, we spoke to Sanjeev Sanyal, the Principal Economic Advisor, Ministry of Finance, on the status of India's macros and the fiscal deficit picture. Let's hear him out.
If you have more expensive capital, it has some impact. Although, having said that, growth momentum has been extraordinarily good so far. As you know, we expect, at least the IMF expects this year's growth to be around 7.4%. Last year, we introduced a slew of difficult measures, GST, cleaning up of the banks using IBC, demonetization, several others, RERA, etc., etc. And of course, they were difficult long-term reforms which did impact growth to some extent, but we are now on the other side of it, and we are beginning to now enjoy the benefit of it. Okay. Of course, more expensive capital does add some sand in the wheels. We are very serious about maintaining fiscal discipline, and we have made many reforms, including in oil prices, where we have been quite conservative at various levels. So it's not that we do not take this fiscal fiscal discipline issue seriously. We totally take it seriously. And yes, where there is space, we will spend, and we are making enormous investments, as you know, in the infrastructure space. Yes. However, there is an issue with agriculture that, by the way, there is a near-term issue about MSBs and so on, but there is also a much wider issue that we need to think about the agriculture sector as a whole in a long-term sense. One of the big achievements of this government is maintaining fiscal discipline and macro stability. Yes. So we have put in a huge amount of effort into it.
So equity markets holding up okay. Let's find out what's happening in the world of commodities. We have Manisha Gupta joining in with all the action. Manisha.
Thank you. And I'm not going to talk about anything else until the cabinet meeting results are out. Sugar. Yes. And the industry really is looking forward for this. I mean, we, of course, will have to check on what impact does it have on a near term. But with the ministry coming out with a relief package for the industry to the tune of 7,000 crores is something that definitely could, even if a wee bit, could support the industry, which is tackling nearly 20,000 crore plus of arrears to be paid. And of course, they're not getting it easy from the banks as well, with the kind of state the banks are in to begin with and the kind of state that this industry is. So what we are looking at is a buffer stock creation. We are looking at a reverse release mechanism being implemented on these mills yet again. And of course, a minimum support price or a floor price below which the sugar mills will not sell sugar. And of course, there also is an expectation that we will hear something about the ethanol production and policy as well. So those are 4 things which are on the card that could be announced in the cabinet meeting today. But, even bigger and better, apart from that, is the MSP announcement, which the country is waiting right now. MSP announcement usually comes in before the sowing begins. We have seen the sowing already start, but this is the Agri Ministry and the Finance Ministry still talking about the kind of funding, procurement method and what it really would take in sense of how would the ministry go about it, in sense is what has led to the cabinet note being going back and forth between these 2 ministries. The important fact to note is that we still are stuck on those 3 ways of procurement. One, of course, is Bhavantar. The second is MSP and procurement. And the third is the market insurance scheme. So it would be interesting to watch on when and how much do we see all of that coming in as well. Remember, the government already has committed this 1.5%. 1.5 times of the cost of production in sense of MSP. So when do we get it, and what really all of these commodities can watch out for is yet another thing apart from the sugar relief package that the country is really waiting for. But we are joined by Dharmesh Bhatia now to talk more about that and given some strategies as well. Dharmesh, hi. First of all, on the MSP and the sugar part, because that really is the buzzing news today. What is your expectation? Where do you see the sector moving?
Good afternoon, Manisha. Definitely, this sector has shown some kind of volatility in the last few days, but overall sentiment internationally, I'm still expecting the market to head south. Production is really high. If you talk about the whole agriculture index, Bloomberg commodity, soft commodity index, everything is at rock bottom price, trading at a decade low. MSP will definitely give some support for the domestic price, but internationally, if the price is still trading lower, then I don't think so that the price will sustain at higher levels. So I'm expecting that on a monthly basis, market will show some kind of bounce back. But the rainfall is really good and continues and see some kind of selling pressure at higher levels. But on an average, I'm not so bullish on this sector. Maybe government will try to give support, but long term, still it's bearish for the sugar industry or the sugar price level.
All right, and how are you looking at the MSP pricing part of it really? Because that is expected to be announced soon as well, as soon as, of course, we see those calculations going through. Any agriculture commodity where you see an emerging trade now coming in?
For short-term momentum, for soft commodity, I will be going long on the RSO, like refined oil, because I think that the market has shown some kind of bounce back from Malaysian prime farm in a stagnant, and you can see the turnaround on that price. But I'll again go long on the cotton price also. The cotton industry also will show some kind of bullishness in coming weeks, and maybe you can see in few months you can see this market heading towards higher levels.
Point taken. Also coming on the metal space, because almost everything has been trading on the higher side. We have copper prices trading at a 3-month highs. You have lead at a 4-month highs on LME, 18-month highs on Shanghai. We've seen good gains in aluminum, nickel, zinc, almost everything. Is there still a buying opportunity for any of these?
Definitely, I'll still go or still showing a focus in international and domestic market also. With trade war easing off and support from both the US and the Chinese market, you can see the price heading towards the previous high. In fact, Diwali target is around 480 to 490 levels. The market will try to hold that level. So my suggestion is that even lead and zinc, both the counters are really bullish. I'm not so much bullish on the aluminium side, whereas arbitrager can go long on lead and short aluminium. The spread was 0 last month. Now the spread is almost 8 to 9 rupees. I'm expecting the spread to head towards 15 rupees. So arbitrager can go with that strategy, but going long on all the metals is advisable.
Okay, all right. Thanks so much for that, Dharmesh, as well as Manisha for running us through all of that. By the way, keep an eye out on the index. We have a couple of stocks like Cipla and IndusInd Bank. They're a tad bit nervous. You pull up the intraday chart, you'll see that both those two stocks have suddenly moved lower. That's the Nifty. It's still holding with gains. But keep an eye out on a couple of these counters. Cipla, Yes Bank as well. Both of them seeing some selling. We'll wrap up on halftime report. You stay with us. Business Lunch comes up next.